Everyone's buying Nvidia. Everyone's buying Microsoft. Everyone's chasing the same 5 AI stocks. But here's what nobody's talking about. The AI boom has 3 hidden bottlenecks. Not chips. Not software. 3 unglamorous, boring-sounding things that could quietly make investors rich in the next few years. Power. Memory. Cooling. Stick with me, because by the end of this video you'll know exactly which companies sit at each choke point, and why Wall Street analysts are calling this the next AI trade. Here's the problem nobody wants to admit: AI data centers are running out of electricity to plug into. They're running out of memory chips to buy. And they're literally running out of ways to keep the servers from melting. Every AI company can build the smartest model in the world, but if there's no power to run it, no memory to feed it, and no cooling to survive it, the whole thing grinds to a halt. That's a bottleneck. And in investing, bottlenecks are where the real money hides, because everyone needs what you're selling, and there's no substitute. Let's break down all 3. A single large AI data center today can use as much electricity as a small city. Multiply that by the hundreds of data centers being built across the US right now, and you get a demand problem that traditional power grids were never designed for. This is why power has quietly become one of the hottest themes in the market. 3 names investors are watching. NextEra Energy, the largest producer of wind and solar power in the US. As AI companies scramble to lock in clean, reliable electricity for their data centers, NextEra is one of the few players big enough to supply it at scale. Williams Companies, a natural gas pipeline giant. Natural gas is still the #1 power source for AI data centers today, and Williams controls a massive share of the infrastructure that moves it. Cameco, a uranium mining company. Yes, uranium. Because tech giants are now signing nuclear power deals to guarantee 24/7 electricity for their data centers, and nuclear needs fuel. Notice the pattern: none of these are tech companies. They're energy companies. But their fate is now tied directly to how fast AI grows. Next bottleneck: memory chips. Every AI model needs to store and access enormous amounts of data at lightning speed. That requires specialized memory chips, and right now, the world literally cannot make enough of them. 3 names to know here. Micron Technology, one of the only companies in the world making advanced AI memory chips at scale. When memory is scarce, pricing power goes up, and Micron is a direct beneficiary. Taiwan Semiconductor, the company that actually manufactures the chips designed by Nvidia, Apple, and nearly everyone else. If AI has a single most important company in its entire supply chain, most analysts would point here. Credo Technology, a smaller, faster-growing name. They make the connectivity chips that move data between AI servers at high speed, an unglamorous but essential piece of the puzzle. Here's the twist though: memory stocks can be volatile. Prices swing hard based on supply and demand cycles. So this bottleneck comes with more risk than power does. Bigger reward, bigger risk. Final bottleneck, and this one surprises people the most. AI chips generate an insane amount of heat. So much heat that traditional air conditioning style cooling doesn't cut it anymore. Data centers are now switching to liquid cooling, literally running coolant directly next to the chips to stop them from failing. The company leading this shift, Vertiv. Vertiv makes the liquid cooling systems, power management, and infrastructure that keeps AI data centers from overheating. As more data centers switch from air to liquid cooling, Vertiv sits right in the middle of that transition. Think of it this way: you can have all the power and all the memory in the world, but if the servers overheat and shut down, none of it matters. Cooling is the silent enabler. So here's the big picture. While everyone fights over the same 5 AI stocks, there's a second layer of the market, the companies that make the boom physically possible. Power. Memory. Cooling. Analysts like Fidelity's Jurian Timmer and firms like Morgan Stanley have both pointed to continued AI capital spending as a major driver for markets through the rest of 2026. That spending doesn't just go to chip makers, it flows into energy grids, memory factories, and cooling systems too. That's the bottleneck trade. Not the obvious names, the ones standing behind them. Now, quick disclaimer, this is not investment advice. Always do your own research before putting in real money. But if this kind of breakdown helped you see the market differently, hit subscribe, because every week we're breaking down where smart money is actually flowing, in plain simple language. Drop a comment, which of these three, power, memory, or cooling, do you think is the biggest opportunity? Let's discuss below. See you in the next one.